What's going on, everyone? And welcome to this week's live. Slightly late. Apologies for that. I did mean to start at 9 at market open, but to be honest, we would have still been sitting here waiting for potential entry. This is going to be both a live trading session, got some live analysis for you, as well as a live backtesting session. I've only traded one day this week. That was Monday. That's because I've been feeling sick this week, but definitely on the mend, feeling a lot better. Tuesday was in the office, but wasn't in the market just because I knew I'd be taking some time off. And then technically Wednesday I was just full day rest, medicating. Today, not in the office still, but feeling good enough to get back to the desk and just get back into that workflow. Rest is still a priority, but yeah, keen to do this. There's only one missed trade from last week, so I don't think it's going to be too long. But obviously some potentially two trades on watch, EURUSD, AUDUSD, pound JPY, just needing a bit more development, and may have, to be honest, just gone early. But I'll take you through that in a bit. And I think the purpose of the live trading is, I think, more to focus on the process side of it than the actual executing of trades, and all of that side of it. Just because obviously we're not trying to sell course or any of that. It's more just to show you, document what our journey is. We all trade differently. But if there's anything you can take away from it, it's the processes that we implement to reach consistency in our trading, and obviously in the profits that we secure. And then obviously for you to hopefully replicate that in your own way, so that it can improve your trading despite the strategy that you trade, or whatever. So this is my TradeZella game plan. This is how I start the day. They do have a template, but I've just customized this based on what obviously I do throughout the day and how I structure my trading day. Obviously starts with the motto, the slogan: consistency is the choice you make when you start doing the things you should be doing day in and day out. That's just a reminder for me to just show up every day, do the work, and obviously a young good morning and good luck. And then the pre-market game plan. I like to start with just morning notes and thoughts. The notes are basically just high impact news. Obviously, this affects my entry confirmation. I can't enter 30 minutes before or after a high impact news event. So I like to just list what's coming up for the day, just so that I know more or less when I won't be trading. And so from this, I know that I should be okay. Well, I am okay for my London session. There's nothing in the morning, but heading into New York, which starts from 3 and then goes till 6 p.m. That's GMT +2. We've got manufacturing and services PMI at 3:45. So literally I've only got that first 15 minutes, which I usually don't trade anyway, but I'll still forecast. I'll still be ready for it. But I know from 3:15, I can't take a trade right up until technically 4:15. But then we've also got new home sales at 4. So technically from 3:30 to 4:30, I can't trade. So I can't trade from USD pairs. I can't execute on USD pairs from 3:15, factoring in these two news events, right up until 4:30, which is obviously the 30 minutes post that event. So that almost sets me up for just trading in alignment with my plan, just to avoid obviously that news volatility. And then I like to just do a bit of a mental, just sort of journal, just on how I'm feeling, thoughts. So today, feeling much better after a slow start to the week. Energy and focus are up, but again, rest is still the priority today, despite being in the market for both sessions. And then conscious that I felt a bit of FOMO over the past 2 days, obviously not being able to trade. Market did move quite a bit. So that being, obviously with that in mind, I need to be conscious to avoid rushing into setups unless they've developed clearly as per my forecast. And so knowing that I'm feeling a bit of FOMO, I'm actively going to wait for more development as opposed to, I think, being quick on the trigger, because I'm not sure whether the lines are blurred between being quick on the trigger as a result of the market just being ready or as a result of my FOMO. So to avoid that, just wait. If there's two potential areas to take a trade, wait for more development. And there's an example of that in the forecast today. And then markets, I just look at dollar index and what we're doing. Prices continue to impulse higher, violated the daily breaker block and fair value gap. 4 hours still counter trend, treating slightly after mitigating a one-sided fair value gap. Looking for continuation higher today for a high time frame, time-based liquidity sweep, and deeper mitigation into the fair value gap. So that also then just aligns what I'm looking for on the dollar, EU, AU, continuation to the downside essentially. And then obviously use USD JPY, GJ, continuation to the upside. And then we get the forecast. So this takes me into my Notion template where I've done my forecast for the session, where I just detail the 3 setups I'm looking at, but I won't go into that because we're going to do that on the charts. So yeah, we can see price protracting nicely to the downside, but just starting on the daily quickly. These are the areas where I just said it had violated. We had this fair value gap in this area, just continued higher, as well as this breaker block continued higher. Now within this order block here, which overlaps with this fair value gap. So seeing continuation to the upside. Price isn't yet showing signs of slowing down. 4 hour still counter trend to the upside, just pulling back slightly. 1 hour range is clear. And we had a bit of, I think this may have been the protraction to the upside for the session. And now we're potentially distributing lower, or this was just a bit of manipulation at the open and the protraction really is to the downside. Because I wanted to see this come into the 50% area, I think, especially for other pairs that I'm looking at, just to gauge the pullback that we'll see on that before we then continue to the upside. That 50% area resting within, I think it's this 4 hour fair value gap, it is. But then we've got a order block resting just below, and the 50% lies at the edge of that fair value gap, but arguably we could adjust that slightly to the 1 hour level, becomes a two-sided area then, but I think still relevant just to see something like that happen. But you know, we are projecting to the downside, and I am anticipating, if not in this session, then by New York session, a completion of that, and then a continuation to the upside. And so that guides what I'm seeing on other pairs. Euro USD as well on the 4 hour, we're continuing lower, just deeper, pulling deeper into discount on the mainly the weekly now, because the daily, yeah, look, it was always more or less this weekly that we're looking at. The daily is arguably forming this new leg here. And once we start to get a push higher from these weekly areas, then we can start to project that on the daily to see how far we'll go higher. But yeah, and then I've just noted this liquidity void here on the weekly that we had, the gap that was filled, but still a liquidity void nonetheless, and that rests in the 79% area. So I think that's a level that we could see achieved. We've seen this time-based liquidity sweep here. We've violated this order block on the daily, and I see us just continuing to the downside. The 4 hour, yeah, we impulsed to the downside quite aggressively at the open, and now we're forming this doji wick type candle. So I'm not a big fan of Euro USD, just given how this candle has formed. Even though we have, you know, now pulled back into this 4 hour order block, we've mitigated that nicely. The 1 hour range is clear. we tapped into the 79% area of that 1 hour range. We've got this 1 hour order block. Yeah, that's formed nicely there too. And price has swept liquidity on the 15-minute. So I just don't like that we really impulse lower at this open and then, impulsed all the way up. So I'll be monitoring this, but I think what's a similar pair that is just shaping up a lot cleaner is AUD USD. Very similar on the daily, right down to the 4 hour. We're just pulling deeper into discount. This though is different from your USD, in that we're at a very shallow point of the daily pullback. We have still swept this time-based liquidity area. We're within this weekly fair value gap, but obviously still a lot more potential to come to the downside, just given dollar index and Euro USD. 4 hour trending to the downside. We've got this order block that's formed here, quite a large area. And so looking for refinement on the 1 hour, which not that it hasn't come, but it's not as clear unless we're looking for very deep pullback. But there's not much here that we can sort of identify as an area. The short entries are in line with the bearish range. We've mitigated this 50% area, mitigated the 4 hour order block. And this is what I was talking about earlier with there could potentially be sort of two kind of areas to take this from. We've got essentially our trade parameters met with the 50% reached. We've got the protraction higher that came at market open. And then on the 15-minute, we swept that time-based liquidity to the upside. So technically, this is ready to go once I get that entry confirmation in the form of a reversal candle. But yeah, the fact that this is such a shallow mitigation and there's so much room to the upside, I do see potential for this to trade a bit higher, correlating that with dollar index and that having the potential to come a bit lower into that equilibrium. I'll be waiting for a bit more development on this, and then obviously pull this 15-minute breaker block, which aligns with the 62% level quite nicely. So that's a bit of discretion used on this pair, just to have a bit more of a patient entry. And so we'll be waiting for this to come a bit higher before seeking that entry confirmation. But I like that we're trading above the true open of today. We've swept liquidity, not a lot of volatility at the open. Look, there was a bit of European news. I think it was German manufacturing PMI, services PMI. There was also French manufacturing and services PMI, and then we've got I guess the EU at 10, manufacturing and services PMI. So I think it's a lot of news coming out of Europe that's causing EU to be a bit volatile. And so we'll prefer AUD USD, which doesn't have as much, well, nothing, at least this morning, only a bit of USD news later. So we'll opt for this entry. So obviously there's potential entries on both the pairs as well as pound JPY, which I'll get to in a bit. But if I had to filter out which of the two I'd rather take, because it would essentially be the same entry, I'm in favor of AUD USD. So just waiting for this. We'll keep an eye on this. Once we get into the supply, then we look for that entry confirmation. And then pound JPY, probably risk off on this for the rest of the session. Price has protracted to the upside, and so we are long. The bias is long, but obviously haven't met those trade parameters. But basically from a top-down perspective, price continues to trade higher. I thought this was going to sell off earlier in the week, and we didn't. We impulsed to the upside. Have achieved that 62% area on our major swing, and the 4 hour, from Wednesday sort of New York session yesterday has started to just sell off as we just pull back. Currently in a 4 hour as well as this 1 hour fair value gap that we're kind of reacting from, as well as the 50% area. And so arguably, again, another one that ticks off the requirements in terms of trade parameters. We're in line with the 1 hour range. We're at the 50% area. We've got the 4 hour and this 1 hour fair value gap. But just looking for a bit more development here. Why we've got what is a 4 hour fair value gap resting below there, which I've just highlighted it on the 1 hour because it aligns quite nicely with the 1 hour. We've got this 1 hour breaker block here in line with this inflection point. And then on the 15-minute, there's also an order block resting in that area here. And then was looking for the protraction lower at this open to then take that to the upside. But I think we're just inducing this level at the 50% area to then potentially sell off over the course of the session, and we could get that during New York session. I'm in favor of that during New York. So although my plan allows me to take 2 entries, or that to be my maximum exposure is two floating positions, that's also a reason why I'd rather only take one setup between Euro USD and AUD USD now, because I don't want to use up all my risk when there is potentially a really good setup lining up on GJ for later this afternoon. So I'd rather just take one now. Also just trying to be conservative because there's a bit of that FOMO in. So I don't want to be trigger happy, first day back in the market this week. I'd rather protect capital, be conservative. If I miss it, an entry, I miss an entry. But I'd rather wait for more development. And so, yeah, we didn't get that sweep lower. We got the protraction higher, which obviously just isn't in line with the plan in any case. And so looking for essentially these lower highs to hold and then price to sell off from there. And then we can get potentially a long setup during New York, potentially then something like that forming. So yeah, GJ definitely just risk off for the rest of the session because we have protracted higher, and now I'll see whatever to come as the distribution lower. But AUD USD still highly in favor of looking for a push higher. That will align nicely with dollar index, which is very, very close to its 50% area, as well as this order block here, just to come lower. And then, looking to take this to the downside. I think AUD USD is looking very clean of all the pairs. And so just waiting for further development there. And then jumping into our one mistrade for the week. It is a Euro USD short position, which was taken on Tuesday, or should have been taken on Tuesday during New York session. And quickly before I get into the Euro USD position, I just want to take you guys through my plan quickly on this, just to make sure that the setup aligns with it. So when we look at it from the daily perspective, we're saying is price at or mitigated daily equilibrium. In this case, we've got weekly, which overlaps as a daily. It's just a high time frame. So we say yes. And then we look at what direction the current 4-hour trend is. That is still counter trend. We're bearish to that high time frame bullish bias. Even though we at equilibrium on the weekly, we're still trading lower. And so we're counter trend. And then is my entry counter trend then or pro trend? I'm looking for shorts to the downside, so my entry is still counter trend. And then for that, I look at the 4 hour or the 1 hour, and then I determine whether prices within a key indicator area during London or New York kill zone. We are within this 4 hour order block, so that's our key indicator area. We are in London kill zone, and so I can proceed then to trade parameters. And then when I get to my trade parameters, first question is my trade in alignment with the 1 hour range? It is. I've got this bearish range. Is price at EPD? We're at 50%, but we're looking again at 62. And then we can see there was just EPD mitigation on the dollar index. I'll get to that in a bit. And then 15 minutes, is there protraction counter to my bias before, during kill zone open? Yes, there is. We can see price trading higher. And then is there a key area mitigation or time-based liquidity sweep? We have got both. We've got this time-based liquidity sweep here, and then we've got the key indicator area mitigation in the form of this breaker block. As we in our entry area, which obviously aligns with this 62% area. And then proceed to entry confirmation, which is a 15-minute reversal candle, a shift of structure on the 1 minute, or a key indicator area and validation on the 5 minute. And then obviously framing the trade, looking for it to provide at least 1:3 risk to reward. And then if there's no high impact news as well within 30 minutes of execution, then we can execute. So this ticks all the boxes. EURUSD just looking like it's coming a lot higher, and we could arguably refine this order block to this sort of extreme level. Mean threshold kind of been respected. That's looking very clean. Dollar index, we've come into this order block, into the 50% area. And arguably on AUDUSD, because we've now gotten those confirmations on dollar index and EURUSD, I'll still be monitoring this. I'll still be looking for price to come up higher here. But this is one of those cases where it's like, if there's indicators on pairs that are highly correlated that, the protraction has climaxed, then for me to almost want this to go 6 pips higher, it then begs the question of perfectionism. And so what I will be looking for is a break and close below here, which is both this fair value gap. So in a sense, starting to look for my entry confirmation, as well as this order block here. We will technically have violated both of those if we close below here. And this is adapting to market 101. Let's not just break structure bottom. And so if we do get that, and then we get a 15-minute reversal candle, then I'll be looking for entries like so. With stops still above this breaker block area, stops well protected. So 1:1.5 down to these lows, but we'll look for a minimum 1:3, which is what, 240 by 3, so 20. Yes. Look, that's it's not attractive, but it gives, I mean, given how far the market moves for 1:3, not attractive, but I still could arguably rein this in slightly, just above the 70.5 area. Shaves 2 pips off. Stop is still well protected. Yeah, look, it gives a decent risk reward, but good stop protection. Well, obviously in the area, if I wanted to put that there, to be honest. Yeah, then it just... But yeah, that is if we do. I think the detail of it, I'll get to it in a moment. I will prioritize, I think, stop placement over, how far the TP is going to stretch. Because technically from a TP basis, just gauging it maybe on the weekly, we'll want to keep it within the 62% range. We're arguably so deep within this weekly fair value gap that we could violate it. But obviously we've got then our next sort of sweep of liquidity here. And so, I think the 62% area is a good sort of barrier where we could see then just further retracement before we go higher. So anything between here and there, I think is acceptable. But yeah, obviously wanting to optimize that risk to reward. But yeah, let's see if this holds or closes below, and then we can act accordingly. So coming back to our EURUSD, I just want to make sure the alert is on here. No, it's going to tell me either way. So EURUSD, Tuesday, London kill zone, starting out on the daily. Price was deeply discounted. Four hours still trending to the downside. And so similarly to what we have now, actually, as daily, EBD has been achieved, trending lower still. The 4 hour is to the downside, but then we are looking for then 4 hour or 1 hour price to be within a key indicator area before then we can move to our trade parameters. So from a 4 hour perspective, not much. This is, I think this order block is what we have. And then on a 1 hour, I would argue to not make it so wide. This 1 hour order block is what we have, but then also a time-based liquidity sweep of that area there. So looking for traction high, it's a New York session. So we're basically looking for that. So I'm going to play this. I just want to see how it develops over London. And then we can see closer to New York. So we can see in London, we actually already mitigate that. Okay, so now approaching New York, price rejected the 1 hour order block. So signs of recapitalization, and then potentially just looking for this time-based liquidity sweep here, which will then align with a protraction higher. Most important factor is that I forgot to check was obviously our 1 hour range. So taking it from the most extreme point, and I think this is potentially what led me to missing this trade, is that there were multiple points to take this from. Could take it from there, the most extreme point. Could have taken it from here, which was a much more sort of conservative point. And then I think there was also this, which was like a mid-ground, mid-point kind of area. These two here, well, technically that was the last low, so probably from this high. That's the high of the order block. So yeah, I'll keep it at that midpoint level, which puts the 50% area above this time-based liquidity sweep, still within the 1 hour order block. But yeah, potentially may not reach that. If we do, obviously, then this might have been the point to put it at. But let's look at that. And we've got 2 minutes till market close, so I just want to check how we're doing here. Dollar index seemingly rejecting. I just want to put this level here for comparison as a break of structure on the 5 minute. Euro USD, yeah, similarly too. If we get that shift of structure across the board, then it adds, yeah, a bit more confidence to the shift of structure. But we'll see. So yeah, coming back to Euro USD now. So yeah, that's where I've placed it there, that 50%. Let's see how we respond to it as we enter New York session. Yeah, okay, and that arguably was the level. So we did sweep liquidity, and I think like I had maybe thought, this was the area. So to be honest, if I see this again, I probably may miss it again. The 50% was mitigated. We had a time-based liquidity sweep, but very shallow nonetheless. And then looking at our entry, so if we take it back to where we would have gotten the entry, reversal candle, but on the 5 minute or the 1 minute, did we have that key indicator area mitigation? Arguably there. The 1 minute, not so much. So I think I would have looked at this area as a 1 minute break of structure to the downside. So we got that at 16:08. So it would be the 4 o'clock candle. So this candle here. as a double opposing then for the entry. Take that short there. Entries, stops there. But exaggerated. There above the 62. Can have above 70. I mean 170, just to give it some room to breathe. And then I'm going to use my calculator for this. 170 by 3, 510. $5.10, 1:3, and that brings us, I guess, just deeper into the fair value gap. That's our entry. 1:1, we apply the half risk method. Bottom left, that's our 1R. And then 1:2, we close 50% and move stops to break even. So let's see how we would have fared. Okay, 1R achieved. We can take 50% off in terms of our risk by adjusting our stop loss to obviously half the pips. Bit of consolidation. Okay, we've now achieved 2R. So stops moved to break even. We can take this off because now we've broken below the lows. And we let the rest run to full TP or to stop us out at break even, essentially. Let's see how this did. And there we get full take profit. So when I come to the notes of this, it was a valid position. Very valid, if I may note. The reason I missed it was what am I saying here? Probably put it down to a bit of ambiguity around the 1 hour range and where the fib would have been projected from to achieve 1R or to achieve 50%, I mean, equilibrium. I was actively trading on the day, but and I did have risk to spare. I think I just moved to break even on pound JPY, so I was just holding USD JPY. And I've just made a note that it's not a significant position that will have a material impact in the long run. Just because of, I think, that ambiguity around where am I projecting the fib, it wasn't crystal clear from that perspective. And so can I say that I wouldn't miss this again? I don't think I can. But it's obviously good to note that when the market is impulsive, should maybe use those conservative fib areas to capitalize on, the lack of deeper pullbacks, because there are still entries despite, the volume that we have. And the result then was obviously a full take profit at 3R. So yeah, interesting trade. Take that off. And yeah, essentially 3R missed from last week. And so coming back to AUD, I got an alert, and just moving now onto one of the main processes, or the next process of the day, because this is obviously my pre-market game plan. And then during the course of the day, my check-in is, the main process, in that I've got time intervals throughout each kill zone where I'm taking note of what the market's doing, and basically just documenting that decision-making process. And so if we maybe just go look at quickly Tuesday last week, Tuesday the 15th. What did I say? Feeling distracted and flustered up. I had a whole situation last week. But yeah, DXY closed bullish, traded through the old block, mitigated one side. This is dollar index. No forecast. So really, EURUSD wasn't even on watch. Yeah, there was nothing really on watch. No forecast pending projection as price quite far away. Projections. But yeah, I did note that I missed that. But yeah, nothing really on watch. So it wasn't a case of, and I think just being able to go back to that is good for me in the sense that I can almost double check the reason why I didn't miss the trade, because I'm obviously back testing now in a different light. And, I've said, look, I missed it because of this reason. Was it a material impact? All of that. But then if I go back to the day and I was actually watching it and I actually had that on watch and I missed it for some other reason, then that's a good way just to double check, are you full of shit? And you actually were watching it and should have taken it, or would you not have taken it anyway? And I think that just kind of confirms for me that I wouldn't have taken it because it wasn't on watch in any case. And so for today, in my at 9:20, which was my first check-in, which is normally just after I finish my forecast, just so that, and that helps me in the sense that I've forecasted by 9. But then 20 minutes later, I just want to make sure I'm clear on what I'm looking for. So I said forecast complete, EU, AU, GU on watch. So I like to just reaffirm that I have forecasted, it's complete, what is on watch, and then how these pairs are kind of playing out. I said AU is the only pair with confirmed traction, counter to my bias, and is within EPD. However, there's further potential for push higher. So we'll be patient for more development before seeking entry confirmation. It's in line with what I said to you earlier. EU and GJ are both within EPD, but have failed to project higher. EU now has, but obviously just because of, I think, how messy it looks, we don't have that on watch. And then now coming to what's going on now, it's just a touch base on, how's the market developing? What are we seeing? What are we getting? And I can now just reaffirm that. So yeah, it's this kind of just documents that, I'm still looking for, the short entries, noting that EU has impulsed higher, trade parameters are met, but because of that volatility, I'm still just in favor of AU. And then also just noting that DXY has now mitigated that EPD, meaning it's technically ready to go. So I will be considering entries on AU short if there's signs across the board, like we've seen, if we get that 5-minute market structure shift on EU and dollar index as well, in alignment with AUD USD, which is the pair I'm looking to execute on. Then that will be a sign that price is now ready to continue to the downside. It will be at the cost of obviously a lower risk to reward because I'll have a larger stock, but that's fine. As long as I can get my minimum risk to reward, then that's all that really matters. And so I'm monitoring micro timeframes for confirmation, but still in favor of that 15-minute breaker block mitigation on AUD USD before the sell-off. And then I can just also mention that GJ, or rather risk off on a GJ as price has protracted higher. So yeah, that just gives you context around. Then at least I know also for the day, if I look back and for whatever reason GJ flew, and I'm now noting or I've gotten my back test for next week, I can then say that, look, I can come back to this and say, okay, it was on watch, but it protracted higher or whatever, and I was looking for it to come lower, and then that will be confirmed by my forecast. But now from this point on, I was just risk off on it. And then in about an hour's time or so, I'll do the same. And then just before my kill zone close, I'll do the same on that. So yeah, that is basically the way I, process the trades that I'm going to take, how I'm looking for them, the sort of level of detail that I go into in terms of like my decision making process. It helps me both in the moment to get clear on what I'm looking for, what I'm not looking for, but then at the same time to have that journaled and on record allows me then to come back in hindsight and look at it from a clean slate to say, did I make this decision while being of sound mind, or in a good frame of mind, or just to assess my decision-making framework later on down the line. And then that I think is where the nuggets really come, when you start to develop a sound sort of decision-making process. And in hindsight, you can look and tweak it a bit and say, okay, because of how I was feeling on this day, maybe this is why I was looking at things a certain way. And as a trader, I think that's so powerful for you to develop that skill set of understanding why you're making certain decisions, because your plan is only going to take you so far in terms of the mechanical steps that you take before pulling the trigger. But there's an element of human behavior that plays a role in how consistently you can execute that plan. And unless you know what's driving that decision making, then you'll always lack the discipline to execute on your plan, or for whatever reason fail to stick to a strategy long enough, or whatever it is. I think there's so many tweaks that come out of studying how you behave and how you make decisions. And for me this year, that's been where I think the most amount of progress has been made. So like I said at the beginning, this is more, the live part of it was more just to show you how I go through these processes. As much as there is a trade in consideration now, I'm going to end this live. And if I'm going to be looking at this until 12 o'clock. If I don't take anything until then I don't take anything. If I do, I do. But the point wasn't to really take it live. It was just to show you how do I get to this point. But you guys obviously know what I'm looking for now. And yeah, if you want to see how I've almost gone through or how, if I've executed on this, what the result was or how it played out, then be sure to check out the link. It should be in the description. If it isn't, and I'm not sure whether it is or not, I'm just going to post it in the comments now. And then, you guys can just follow me on TradingView, because I do trade recaps there from entry right through management and exit. And you guys can check it out there if you want to see how this trade played out, whether I took it or not. So remember, guys, consistency is the choice you make when you start doing the things you know you should be doing day in and day out.